Hello everyone and welcome to my channel. Today I want to talk about another pattern called triangle pattern. Triangle pattern is very useful and actually I'm a fan of this one as well. We have three different type of triangle patterns which we're going to cover on this video. So the first one is the symmetric. Yep, symmetrical is better call it, and I think symmetrical is a double M. Yep, symmetrical triangle. Then we have the ascending triangle. So we'll be ascending, and also yep, we have another one called descending triangle. So let me descending triangle. So sometimes I'm using this like whiteboard thing. I'm not sure if it's a good thing or not. But anyway, so here you can see the topics. We are going to talk about triangle pattern, and we have three different type of triangle. So what is triangle? As I said before, and as you know, the price never goes in one direction with no changes. It always has its ups and downs. But the ups and downs normally follow a pattern. So the symmetrical triangle, normally, I'm saying normally, forms during a trend as a continuation pattern, but sometimes it can happen at the reversal. So yeah, be careful. At the end of the triangle, so let me just first draw something here. Imagine price is moving up. Then you see here, it just does something like this. You can see. It's roughly symmetrical, so it's in both sides of the horizontal line here. And as you can see, the pattern continues at least two, it makes two lows and sometimes more. I'm saying at least, and two highs, as you can see like this. Okay, so that's I'm saying just these things so you can recognize the pattern by these shapes. When these points are connected, like here, we're connecting the lines. The lines actually converge as they are extended. So these two highs, these two lows, we just connect these and the lines converge here. So at the end of this, some point when we're getting closer to the end of this triangle, the price will break the triangle. So imagine something like this happens, then it goes to goes up, or sometimes it can just go down. Uh, Normally, the price will continue after symmetrical triangle. The trend will be just the same. So if we are in an uptrend, that's a continuation as often. But as I said, sometimes it can be a reversal point as well. So you should be careful. But as soon as you see a first candle shaping above or below, that's the more conservative way, then you should short here or go long here. So that's your signal. Okay, so this is your signal. And the take profit, normally the two, you can open two trades here, or if your application allows you to close partially, just open one, then put the first take profit, the same pips that you can find here between the first high and low, first low, then add that to here. That would be your take profit. And the other one, which happens sooner, is the difference between this line here and the high, first high. So you close some here and the rest close here. That's up to you anyway, depending on the strategy. But this is how normally I set up this pattern. The other shapes of the triangle patterns are very similar. So, the ascending triangle is a bullish formation normally. For example, price is just moving like this, then it goes to a point that you can see a resistance line here. So as I said, the ascending triangle is a bullish formation and normally formed during an uptrend. So this is like, you can call it just like a consolidation, but very small. So here you can have, if you are scalper, which we are not anyway. So just ignore those up and downs here. That's the best approach for trading like this. Sorry if this is not horizontal 100%. So after, and let me just draw the other line here. So as it gets closer to the end of the triangle, then at a point it will just the same thing happens, and the price goes up. So that's the bullish scenario. So at the end of the triangle, anything can happen. But for the bullish one, if the trend is up, after we probably will have the same trend. But as I said, it can be the opposite direction as well. So be careful. See which direction the price just breaks. So if it goes above this resistance line, then that's a bullish one. But if it goes below, then be careful and wait and analyze the market more to see if going short is an option. The other one is descending. So descending triangle. For the ascending triangle, we had the resistance line, but for the descending one, which is the bearish formation, we have a support line. So let me just draw a support line here. Okay. Then how this happens, the price was bearish before, normally, as I said. Then it goes like this. So if you just connect the lines to each other. This would be your support, and as you can see, we have an upper edge for the triangle here as well. At a point, after forming at least two highs and two lows, then the price normally continues. And again, I'm saying normally, so it continues its bearish trend. Let's just go back to the chart to see what they looks like in reality and how we can set the orders. Okay, this is US dollar versus Mexican peso. So here you can see a nice triangle with shaping. So if we draw this one, and at the top you can see this. So we have one, two highs, and we can see one and two low. So this is a triangle. Now the difference between here, which was 20, as you can see, so it was 20.096, and here was 20.21. Say the difference is 0.21. So here, if you open at 21.8, you can go to 20.4, some 20 point, sorry, yeah. If you add just the similar distance from here to here, you can set the take profit somewhere in 20.3 here. And as I said, you could have opened two trades and put one smaller take profit somewhere here, then the next one here. And as you can see, anyway, the price gone up very nicely, and this worked perfectly. If you go and look for different scenario, I just want to show you one that the current trend didn't work, and it just actually worked as a reversal point. So if you look here, for example, you can see that a triangle shaped here. You have lows and you have highs, but anyway, the price goes up again. Price was bearish, the trend was bearish, but after that it goes bullish. So yeah, be careful when setting up your trades using triangle. It's very nice, and just to remember, imagine that you throw a ball. For example, if you have a ball here, you throw it here. If the ground is like a horizontal line, then the ball will bounce, and it gets smaller and smaller until it gets the edge of a table, for example. Then it goes down. So that's I'm just saying that how you can remember how it looks like, and the same thing for the other ones as well. So obviously, even here, if you throw a ball here, it goes like this, then goes less, and on the same scenario here. But anyway, that's just to remember how it looks like. That's very interesting how harmony is working on the patterns and shaping the price patterns. So it's very nice because it's part of the head you know mentality, and how people react to the price changes. So the group of people just start buying and selling, then the demand decreases as the see less movement, then at one point they say, okay, now it's good time again. They start and buy. This is just technically, that fundamentally is different. And if, for example, after a quiet time, normally before a special event, then you have the some form of financial data for like interest rates coming out, then all of a sudden again the price starts to move. That was all about the triangle pattern. I hope you learned something. Have a nice day and see you later.